Hello, my name is Peter Walton from Zenith, and I'm talking to you today about recent changes we've made to our model portfolios. The reporting season has just completed, and we have finalised our review of the results overall and of individual companies. So what do we know about current events happening in Australia and the world? Well, the major things are obviously the pandemic and the rollout of the vaccine, and that seems to be progressing without major side effects. But what we do know is that it will take some time before it will become really effective and really make a difference. So perhaps that will take longer than initially expected. On the economic front, what has continued has been massive government stimulus, both in Australia and overseas, particularly in the US, to support the economy, which has meant the economy has rebounded much faster than would have been expected. You probably heard that our property market is also now booming, which was not anticipated not long ago. So in relation to the share market, what we have seen recently is almost a two-speed result. Companies in the mining sector and to some extent the banks, the financials, have had a fairly good run, although the banks now don't look cheap anymore. Whereas in other areas, particularly say technology and healthcare, have taken a bit of a hit. Even the almighty CSL, which is the largest company on the Australian Stock Exchange, its price has fallen by about 20% in the last 3 months. Not for any long-standing reason, but simply as a result mostly of just current sentiment. So what we have done, we have looked at the model portfolios, which are currently in line with our normal weightings in terms of the amount in growth stocks versus defensive stocks, and whether you might be in a growth portfolio, a balanced portfolio, or a more conservative portfolio. Our current weightings are in line with our targets. Generally speaking, we've been quite happy with the results from the companies we follow. Obviously, some companies have reported lower results as a result of the pandemic, while others, almost surprisingly, have reported very strong results. We have completed a rebalance, which you will see if you log on to your accounts, or if you want more details, please contact us. And for the companies that we still are very confident in, we're happy to support them. We think some of them have been oversold. And for some others where there have been recent good gains in the share price, we have taken a bit of the profit to rebalance downwards. We've also consolidated in a few areas. Particularly, we use what we call bank hybrids, which are a reasonably defensive way to place some of the portfolio with a focus on earning interest. And we've consolidated some of those into a product which is a more diverse group of these bank hybrids rather than trying to select individual ones. Overall, we still watch the market with great interest, and we follow any announcements and make our judgments accordingly. But please feel free to look at your portfolio, and if you have any queries at all, please feel free to contact us. We'll be in touch again soon. Thank you.